Maverick traders, welcome out to your currency recap for February 3rd. Corey here with you. We're going to take you through meaningful news in the markets. We'll talk about tariffs, make sense of it, and we're going to highlight our best crypto and Forex trade ideas.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So markets were kind of interesting today. We came in over the weekend and futures were down sharply. So as expected, equities fell and it was pretty ugly early on. Why did this happen? Because tariffs were announced against some of the US's largest trade partners, Mexico, Canada, and so forth. Now the tariffs on Mexico, the news came out midday that those are going to be delayed by 1 month. There are ongoing discussions between the president of Mexico and the U.S., and we'll see where that takes us. But that's going to be the continuation of, there's just going to be this tit for tat. There's going to be this back and forth. What's going to be instituted against the U.S.? What is the U.S. going to institute in terms of tariffs against other countries? And we're not going to hear the end of that yet. Now, as we look at currencies, everything was relatively stable when considering the volatility in equities. We saw, the euro down 0.4%, the Aussie down about 0.5%, Japanese yen up 0.5%, but ultimately pretty stable given the volatility. So let's take a look at equities down about 1%, crypto down about 1%, gold and oil both slightly higher. Bitcoin was the outperformer. Bitcoin Cash, Ethereum, and Litecoin all got smacked. So, why is that? Well, there could be this argument for relative value, relative safety. Bitcoin is certainly the biggest and seemingly safest in crypto universe, and also has some semblance of, well, I'd rather be in Bitcoin than this or than that. So I think that's where that divergence came from. Market outlook, we're in sideways patterns. If we take a closer look here, you can see the moving averages bunch sideways. The price action gap down, but we're right on top of those. So right now we're in a sideways range. However, this push lower makes a lower low than prior lows. Even as you rally, you'd be expected to put in a lower high than prior highs. That's what a downtrend is. A downtrend zigs and zags lower, and that seems to be the pattern that's very likely to continue to form from here. So we would call that in equity land more of a risk-off environment. I would say it's neutral to bearish. It's certainly not bullish, but it's neutral / bearish in equities. Now, if you look at this week, we've got the Bank of England out with a monetary report. They're expected to cut rates by 25 basis points. We've got non-farm payrolls in the U.S. Expectation is for a pretty sizable drop and kind of an ugly employment number. Same thing in Canada, where the number is supposed to come in light and worse than prior month's numbers. So we'll keep an eye on that. That may keep the Fed on hold a little bit longer. If we don't see some improvement in the economy and so forth, well, maybe they go ahead and start to cut rates. So that will dictate some of that as we get economic data over the next couple of months. Really, we always say that in between the ones are kind of indecisive, but you've got the CAD and you've got the British pound on the stronger side. What to pair that up with? I would say the euro in FX looks the weakest right now. So maybe you're shorting the euro against the CAD or the pound. Let's look at a couple of these charts together. Again, we're looking at velocity on this 4-hour chart. You've got an upward sloping moving average, an RSI that's up in the stronger area, and you're on a buy signal. Why don't I give it a stronger reading? Well, it's not really got a ton of velocity here, but all it would take is just another push to the upside, and this moving average will turn, this RSI will turn right back up, and away we go. So British pound has been on my strong list. The last couple of weeks, it continues to deserve that. If you want a reversal pattern, CAD had that. CAD broke from downtrend to uptrend today. Now, we're getting more bullish. We turn into a buy signal. We've got some upward sloping. Here's the problem. I'm not personally a fan of playing breakouts when there's a lot of overhead resistance right above the price action. So I would rather play this on a dip, meaning I'd like the CAD to consolidate and then start to turn up again, and that's where I'd be more interested in buying. Give me a base, give me a pullback, something along those lines, and then I'm more inclined to get in. So again, this tariff news is not going away in the short term. That creates some unexpected bouts of volatility. Remember, you've got the Bank of England reporting monetary policy and expected to cut rates this week, but the CAD and the British pound seem like the strongest currency in the here and now. Hope you enjoyed today's currency recap. Have a great week, everyone. We'll see you next time.